What is a pre-approval and how long does it last? That's what we're talking about today in the eCentral Business Show. I'm John Nayler and I'm joined today by a resident expert mortgage broker, Laura Sillano.
Hello.
Yeah, it's got a ring to it, hasn't it?
Oh, yeah.
Oh, well, lucky us. Anyway, it's a pleasure to have you here, Laura. Now, let's talk about advice. And this advice today, is this anything that specific people should take away and do exactly what you say today?
I highly doubt it, so no.
Okay.
No,
all right.
Not advice.
No, but that's the thing. You love to have these personal conversations with people and understand their full story and then tailor advice, yeah?
Correct,
Oh,
yeah.
Right, yeah. There's a disclaimer at the end as well, if you're interested in sticking around that long. Now, anyway, so pre-approvals. Now, why is it important to start with?
So a pre-approval is used for people who want to know how the bank is going to view them before they actually enter into a transaction. It's essentially an assessment of the borrowers themselves and their creditworthiness at the time that we do the pre-approval. It doesn't mean that you can then just go out and buy anything, because you still, without going unconditional on a contract, for example, because you'd still need to value the property and make sure that the property is acceptable to the bank. But it gives you an indication of how whether the bank likes you.
Oh, really?
Yeah. Not personally, but likes your situation.
Okay, so that's the thing. So and the other things we've touched on in the series around genuine savings and, you know, whether you're self-employed and how you build, you know, that model around, you know, serviceability and all these things you've told me about over the past sort of few months, yeah? Okay, so it's all about getting to that point where the bank says, yeah, we like you, yeah?
Yeah.
Okay, so that's something to look forward to. Now, how long does it last? I mean...
How long does a pre-approval last? Okay, so a pre-approval can only last 90 days. Because the assessment is only valid for 90 days, and that's in legislation. So you can't have a pre-approval that lasts for 180 days or that lasts for a whole year. It lasts for 90 days. It can be extended, and different lenders have different ways of extending a pre-approval, but there's always some kind of action that is required at the point of extension. So it might be that you just need to provide updated payslips at that time, or it might be that you need to sign a form to confirm that nothing has changed, or it might be that you need to submit further information at that time. Okay. Yeah, to extend it.
Yeah. And so what are the sorts of things then? So how do you build that story? Because we know that when you go to lend money, there's a big complicated story that the borrower's got to look at a whole, or the lender's got to look at a whole, the complete story. But what are the parts of that make up a pre-approval application?
So that's really to do with the people rather than the actual security, and also the proposed transaction. So, for example, it might be, so it's the people, so their credit history, plus their savings, plus their borrowing capacity, so their income and expenses that come into play with it. And then the proposed property that they're looking at buying.
Okay, so this is a scenario. Yeah.
Roughly, we want to go buy this. Does that look okay to you? And they go, yep, you're then pre-approved to purchase up to $550 with a loan amount of $500. You know, come back to us when you found a house.
Okay. And I get that whole thing about, like, then when you actually go to make the application, obviously it's going to be based around the property in question, because we always go find that dream place, don't we? That apartment or townhouse or house. Yeah.
One of the things that we do when we're doing a pre-approval for people is we go above what they actually initially want to spend, because you can always bring a pre-approval down. It's a lot harder to go up. So if somebody is wanting to buy a property for, say, $500, then we might do a pre-approval for $530 or $540, so that they have that wiggle room to be able to go up, and they know that they can go up that high if they find something that's perfect.
So that's great. So it's a pre-approval for a particular amount, or even do the lenders come back and say, oh, we pre-approved to this amount? Does that happen as well or not?
Generally, they will approve according to the application that we've submitted.
Okay.
So if your borrowing capacity is $800 and we've submitted for $500, the lender won't give you a pre-approval for $800.
Okay. And correct me if I'm wrong, but you guys already have, as mortgage brokers, have a good idea about what they're going to pre-approve.
Yeah. So that's the entire point.
Oh, okay. Well, I'm glad we got there.
We would want to know.
5.5 minutes in.
We'd want to know how the lender was going to view it. We would want to have a really good idea of how the lender was going to view it before we actually submitted.
Yeah, okay.
Because if we didn't know that, that would just
we're not helping.
What are we doing?
Okay.
You know? Yeah.
Okay, that's it. So that's part of that. The mortgage broker's role in this case, I take it's fairly clear and important type thing. It's like working with the potential borrower to say, oh, look, this is what the bank will accept.
Yeah.
So let's work with that.
Yeah. And then selecting the bank based on what the different banks might come back with. The other thing about a pre-approval, it is valid for the circumstances that you have in the application. So if something changes in that time, please don't change your job during pre-approval.
Okay.
For example.
Don't do anything significant that's going to change your situation.
Because it just completely invalidates what we've just done.
Okay.
So the pre-approval is based on a particular set of circumstances. It's not based on, okay, now I've had this job for 4 years and now I'm going to go do that job and I'm on probation. That's not the pre-approval.
Okay.
You can't just go do whatever you want during the pre-approval period if you want that pre-approval to still be valid.
Don't buy a holiday, don't buy a car, actually... Yeah, okay.
Yeah.
Keep your story tight, yeah?
Try not to take on an additional commitment that is not in the pre-approval during the pre-approval period.
Yeah, okay, because that's going to cause dramas when you actually make the real application. And correct me if I'm wrong, but when you actually go to make the full application, it is a separate and full application. The pre-approval's nice, and it's sort of introduced you, but you've got to make sure that the box. Yeah,
basically what you've got to do is just make sure that the story is still consistent with what we initially said. That you haven't gone and got a whole additional commitment by buying 2 cars with 2 car loans for, $1,500 a month. You haven't done that.
Yeah.
So it's just making sure the pre-approval is valid as long as at the time of converting to a full application, you're consistent with what we've submitted.
Okay, fair enough.
If not, then it's a whole new application.
Okay. Now, this is obviously a real good reason to start that conversation early and help build, around the person's expectations or build their expectations based upon quality advice, yeah?
Yeah.
From a quality mortgage broker like Laura Sillano, yeah?
Sure.
Okay. Now, how do they get hold of you?
You can contact me on mobile, which is 0422 320 497, or also you can email through to the office, home@podfinancial.com.au.
Fabulous. Okay, another great informative session with Laura Sillano, our resident expert mortgage broker on the eCentral Business Show. We'll talk to you next time.